So we just spoke with Dirk van Dam about the legal considerations and setup of a fund. And that's all very interesting, but it's only the start, because once you have everything set up, we need to actually onboard investors. Otherwise, your investment as the fund manager is gone very quickly. So therefore, we have here Jester Schilder. He's responsible for the marketing and communications, also in fund structuring. And he's going to talk firstly about what Dirk mentioned earlier on this webinar, the reversed solicitation. So how do we look at that from a marketing sales perspective, which I have to say quite carefully.
Yeah, first of all, thanks for having me, Simon. We're going to indeed talk about the reverse solicitation, as well as how to position your alternative investment fund. And when it comes to reverse solicitation, you have to understand that it really comes down to protecting people from potentially investing their money in things that they should not invest it in. And therefore, when it comes down to reverse solicitation, people have to be a sophisticated investor in order to present your investment opportunity. And it's mostly about just not blatantly soliciting and not blatantly promoting and advertising your alternative investment offer. Now, that doesn't mean that you cannot build your network and make it go from there. So my advice in general is to just focus more on yourself, focus more on your personal brand, build your network, but just don't promote it. Build your network, and when you're building a relationship with someone, at any point in the future, they want to know what you're doing, they want to know what you're about, and that is a moment where you can tell them about it, and then you reach a natural solicited or reverse solicitation.
So that could be, let's say, if I'm very well versed in investing in startups, but I'm going to a conference, I meet somebody, I can talk about what I think about how startups could grow potentially to the biggest returns, which would be beneficial for me, but not per se talk about the fund yet. They have to ask themselves in that case, like, so what do you actually do? And then the reverse solicitation barrier is broken.
Yeah, I love your example, because you should not go to an event and have your business cards in your pocket and give them to everyone and tell them about your investment offer. But of course, you can have a conversation. You can tell people that you are in the investment industry, and you will naturally reach the point where reverse solicitation happens. You just should not be the one who's actively promoting it.
Right. So how do you select what kind of investors you have? How do you create a profile, let's say, around them?
Yeah, great, fantastic question. I believe that it is very important to build your alternative investment fund around your ideal investor profile. There are different types of investment funds. You have short local periods, you have long local periods, you have high risk, you have low risk, and not every investor has the same appetite. So it's going to be very important to make sure that you have an ideal investor so that you can build it all around it, as well as realize that as a fund manager, you're literally managing funds of other people. So one of the main jobs that you're actually having is managing the money of other people. So making sure that that you have this very clear is just important. There are a few things that you really need to take in consideration when you're going to profile your investors. If you're going to, let's say, have a crypto hedge fund that is going to be high risk, then people would like to also take out their money more quickly. So they want to be able to take out their money within 3 months or within 12 months, which might be very different than, for example, doing like a low risk real estate, and they might be willing to have it in the fund for 5 years completely locked up. So you have to really pick your profile and also see what their considerations are and what is something that they find important. To give the example of, let's say, real estate, they might care maybe more about ESG than other types of investors. So that's how you kind of profile everything together. You look at risk appetite, how long it's going to be locked up, the type of industry they are in, and take it from there.
So with a lockup, you basically mean you invest your funds, but you cannot per se get them out immediately. So it's about the liquidity period.
Yes, exactly.
Right. So then you have your investment profile or your investor profile, what kind of person actually fits to my type of fund. But how do you then differentiate your fund in a way that it actually stands out to the investor that is asking about more information?
Yeah, that's a great question as well, especially since the alternative investment world, it is a competitive market. So before you go to the market, you really need to strategize and make sure that you're actually going to put a fund in the market that is going to be different, that you're going to differentiate yourself. And there are several ways to differentiate yourself. The first is just you're going to be your performance. That's what you're going to be judged upon. So if, let's say in the future, you're thinking about starting a fund, make sure that the asset class that you're in, that you're just going to be really, really good at it. So, or you're going to be a fantastic trader, you're going to be really good at real estate. Just really know your stuff so that you can get great results. Make sure that you have a solid team. If it's just going to be you and your fund, then that might be less interesting for people, as when you maybe have 5 other board members that are also having a high profile. So building the right team around you is a way that you can differentiate yourself. You can build a unique proposition, for example, within your proposition. So let's say you're a trader, you can come up with a different trading strategy so that you may be dealing with investors who are already trading, but they want to add that additional trading strategy to their overall portfolio. And I would say, lastly, you can look at elements such as ESG and also bring in those components in your overall fund operations.
So can you go a little bit deeper on what you mean with the ESG aspect? It's very new in the market, but you hear it more and more.
Yeah, it's in general quite new in the business world in general, and especially when it comes to corporates, they really have to still find their way to go about it. So what I always advise, especially to investment funds, is what is a way that we can do good to the world, and what is a way that we can give back, and what is actually something that I'm personally passionate about. When you know that, for example, let's say you want to invest back into the town that your fund is set up, you can do something within there. So just find your passion and find a way to give back. Maybe don't focus too much into the specific ESG, because eventually it will also come down to the investors and what they personally like. But the easiest is to do what you like, and then you will automatically attract similar kind of people into your fund.
From your own network, perhaps, as well.
Yeah, exactly.
So in the beginning, you said the track record is one point that's very interesting, or a very important point for investors to take into consideration before they invest, so they know what the returns are going to be. But we also work with a lot of people that set up a fund for the first time. So what would you advise them when they do perhaps not yet have a track record, because it is actually the first time that they raise money for their fund and do it in the setup of a fund? What would you say are key aspects they should take into consideration when communicating to potential investors?
Yeah, I would say before even maybe going there, already before setting up your fund, try to build your track record. So you can maybe set up syndications, or you can do smaller projects. So this way you can build it up and you can actually show something. So for example, if you're going to set up a venture capital fund, before you can show what you actually have been doing as an angel investor, so you can take those with you. But besides that, when you actually set up the fund and you have a limited track record, it all comes down to transparency and showing what you have done before, because it comes down to trust. So maybe when you have your first fund, the period that you're going to be fundraising, take a little bit more time out of it. Understand that that's going to take longer, and that maybe instead of 1 or 2 meetings, you might need a few more meetings to really explain your strategy, because they're not going to yet just take that risk, but they will also risk in your strategy. But that also should not be a discouragement, because when you actually build that relationship, they will be more involved with you. They might also share their thoughts on your strategy, and you can really do it all together.
So what you said is quite interesting. Depending on the fund or the network of the person, the time of raising funds might be very different. Right?
Exactly.
So
yeah,
let's say some people, they will start a fund, but they don't have connections, they don't have the network yet for potential investors. They have to set it up. Is there any period you would say that you have to take into consideration when you want to start your fund, but perhaps you do not have the network yet?
Yeah, usually when people have a network, it can still take about 3 months, because it's not going to be all happening immediately. So you have to definitely take that into account. If you don't have a network, it almost, especially in fundraising, comes down to building your network when you're fundraising, especially because of reverse solicitation, you can only solicitate to people who are actually in your network, who you already know and who know what you're doing. So you need to build your network, and you cannot build a network in 3 months. So it's important to take in account like a good year where you actually are going to build those relationships so that they can become part of your fund.
Right. Very, very interesting. And I think this differentiation is also crucial, because of the reverse solicitation, the only people that are going to get to see your documentation and your information are the people that come to you. So make sure that's set up correctly as well. So then we go to the raising capital. One of the things you have said repeatedly is leverage your network. What are other things you can do to get money into your fund?
Yeah, so besides making sure that you have your network ready, the easiest thing that you actually can do is find someone who is specialized in fundraising. Someone who might have a big network, maybe someone who comes from an other industry where they have been dealing with investors or high net worth individuals,
Right.
and then give that person a actual share in your fund, because this way they're going to be part of your team. And fundraising is one of the hardest parts of getting your fund set up. So it's going to be completely worth it to bring in someone who is an expert at that.
And is that any fundraiser, or would you say that per asset class, for example, there's a type of fundraiser that has a specific niche for that, or could you just bring anybody on board?
That's a very good question. You cannot bring anyone on board because it really depends on the type of risk profiles that you're going to set up. It's going to be investors who have like a lower risk appetite, a higher one. So if you have someone who's specialized in raising money for a low risk real estate, it's going to be extremely hard for that fundraiser to find people for like a high risk crypto hedge fund or something in that direction. So ideally find someone who fits within that criteria already.
Yeah, so it's quite crucial actually then to qualify the potential fundraising partner, that they have the network that could actually fill up your fund, so you don't waste too many efforts on an investment fundraiser that might not fit your fund.
Yeah, I love the word that you said, qualification. For anyone who's going to be part of your fund, really make sure that you qualify them, and that you know that they have the experience and the network and the resources to actually make it happen. Setting up a fund is not easy. You need someone who actually has the experience and the accolades to do it.
And are these the only ways to raise money? So we have the fundraiser, we have the network. Are there other things you can do to bring on board capital?
Definitely. I would say there are two more options that you have. The first one is capital introductions. And this way you actually entice people to introduce you to potential investors. So people who might be already working with high net worth individuals. An example of that could be a wealth manager. You can approach local wealth managers and you can build a relationship with them, and you can make an agreement that they get a compensation if they're going to introduce you to interesting investors. So that are capital introductions. And then what you also can do is hire a company that is specialized in fundraising. Such a company is called a placement agent. And they are really good at it. They already have a network in place. They're also a little bit more expensive. So what you often see is people start their first fund and they do it in their own network. And when things are going well and they have the first money raised, then they hire a placement agency.
Right, and I think also what's quite interesting is that with all these situations where you have a fundraiser, you have capital introduction or a placement agent, you basically tap into an existing network. So when you start networking for yourself, would you say that's also a strategy you should apply, where you look at existing communities where you're going to network that might already invest in your space?
Yeah, that's a good one as well. There are a lot of events. Even nowadays, there are Facebook groups that you actually can find. If you're in real estate, there are Facebook groups out there where there are already thousands of investors in there. Then the same, don't go into the group and immediately start like spamming and promoting it, but actually take your time, invest into that specific community, and always when you invest and when you give, you will get back in return.
Right. Thank you so much for the introduction. I think you spoke a little bit about what kind of investors do we actually want to bring on board and fits the strategy of our fund and the risk profile, and how do we separate our fund from potential competitors. That was also the last part of this webinar where we spoke about the communication framework. Jester, thank you so much for giving some insights there. So for all the viewers online and